Okay, good afternoon, everyone. Welcome to our weekly training webinar series. So, I want everyone to sit back, relax, make sure you are taking plenty of notes. Use our Q&A pane. So there's an expandable pane that you can minimize or expand, and you can type in as we go, okay? Comments, questions, if you want to get started, whatever it is. If you want someone to call you after the training, just type in, and we will get to every single person. Actually, we'll get to you in real time. Andrew is behind the monitors now. And if we do not get to you, we will reach out as soon as we wrap up right before 4 p.m. Eastern Time. So, as you know by now, especially, right, if you've been with us for a while or even if you're newer with us, we huddle up every single week with our marketing team and come up with new ideas. We try to be creative and put ourselves in your shoes and think, okay, what can I use, right, to take out in the field and make more stories and open new doors? That's the name of the game. And you, as an agent and advisor, you have to have the latest and greatest at your fingertips, right? Especially when you're talking to new prospects and even existing clients and cross selling, maybe. So you're out there in the field constantly making calls and emails, marketing on social media. You need to know what's hot, what's not, and you never want to have another agent get in the door speaking to your client and they come up with some brilliant product or idea that you don't have access to or you don't know enough to be dangerous, right? And they wind up getting the sale, especially if it's your client. So that's why we wanted to have this webinar today with Keith, with One America. They made lots of updates, exciting changes at the home office, and we wanted Keith to come on to discuss these new updates, sales ideas, the new prospecting store launch. So lots and lots of really cool stuff that will help you all out there in the field tell these new stories. So, what's unique about One America is they have a niche on the life and annuity side, right, with living benefits, long-term care. And quite frankly, no one else has a story like One America has, okay? Ratings, financials, excellent, a great product niche. And the only thing that we find, right, when we talk to agents, survey agents, is they love the story and concept, but some agents, it's hard for them to get their arms wrapped around the products and the story around One America. So I asked Keith to come on and give everyone kind of a 101. And then for the veterans, right, that have sold a ton of premium with One America, there's also going to be something brand new for you when it comes to prospecting. So this is going to be a little bit for everyone. Most important, if you're a final expense or term agent, right, in the middle of Wisconsin, right, or you're a huge estate planning attorney slash CPA slash financial advisor, okay, working with multi-million-dollar clients, right, you're going to walk away with nuggets as well. So this is going to be great. I'm very excited about this. Also, keep in mind, One America is one of our core companies, and they're going to be at the expo on April 21st. Okay, so you will see them present live in South Florida. Okay, so obviously make sure your RSVP is in because we are filling up. The max is 300 because of COVID, so make sure you RSVP today as soon as we hang up. What I also want to talk about, if we can go to the next slide here real fast, is we have a local agency. And what's funny is this is a younger gentleman, and he came to us, and I don't want to mention any agency names, but you can just imagine when you think of like typical MLM fashion, right? Right? 22 layers and you report to a GA2 who reports to a GA who reports to a MGA4 who reports to a MGA slash 4B. It just goes on and on and on and on and on, right? In fact, your name is not even on the policies you're selling. they are agent of record. So it was one of those crazy MLM pyramid type of agencies. So wasn't a good story. Came to us and he said, Bill, I have this great idea. I know how to generate leads and I need the products, I need the contracts and the support, most important, right? And he started with us and everything was great. And he tells me he's using this CRM tool. He's paying hundreds and hundreds of dollars every month, and the data isn't secure. So, in other words, if they part ways, this third party company has access to your data. It was just a crazy story. It was a very expensive platform. So we were talking and I told him about Ringy. Okay. And this isn't an infomercial. This just happened to come in a few days ago, but I wanted to share it. So I told him about Ringy. I talked to John about Agency Automator, our database, our technology that's available. And little by little, he started to make the switch. Okay, moved over to Ringy, started leveraging our marketing pieces and the library that we offer, right, at no charge, the database through Agency Automator. He's running social media ads. And next thing you know, we see without him saying anything, the premium starts skyrocketing. Apps are coming in, premium skyrocketing. He's coming up on my list every week. And I'm like, wow, this is unbelievable. And next thing you know, I get an email from John, okay? And I wanted to share it with you all. This just happened within the last few days. So here's what's so funny about this. So he came to us, he literally had no idea about anything outside of this MLM group, right? I mean, he was just focused on their products, their way of selling, and which is not the, in my opinion, right, the right way to do things. There's a whole other part of our industry. There's a right way to go out there and sell and be agent of record and provide the best products, and there's a wrong way. So obviously I'm not going to mention names like I just said, but anyway, I see this email come in and I'm like, you know what, Andrew, we have to show everyone listening today, right, what John's comments were. So this came in and we just copy and pasted a short part of the email here, but I'm converting these leads like nobody's business since I switched over to Ringy. I was using an automated dialer before, and clearly that was not the best practice. I have more leads than I can handle now. Thanks, John. Okay, so this wasn't, I didn't say, hey, tell me your thoughts or, do you like Ringy? What's going on? Anyway, he listened to us. He put his right foot forward. He experimented, and this was the outcome. Okay, now he's on fire, and it's just beginning. So the program works. Okay, we have the resources to help you. Obviously, you have to give these a try. In fact, they have a 2-week free trial, so you're not even obligated, but I can't encourage you enough. I always talk about your bucket of prospects, and then it's your job to get the message out there, to get your message to your bucket of prospects, right? And communicate with the bucket, so to speak, any way that they prefer. And that could be a text, phone call, email, and that's what Ringy does. Until that prospect clicks, schedule a call with Bill Levinson Tuesday at 2 p.m. Okay, they're going to keep getting your campaign, your touches. It works genius. Okay, about 20 to 30% of the prospects in that bucket are going to hit set appointment, set call. Okay. And I know for a fact because I'm hearing this on the street, right, with our agents, and we're using this for agents, for new agents. It's the same exact philosophy, just a different message. Okay. We're looking for agents that write business. You're looking for prospects to buy policies. Okay. No brainer. Let's move over to the right side. This is just posted on our Facebook page. Thank you, Celinda, by the way. I truly love being part of the Levinson Group. You guys are truly amazing. I might be going slow with the applications, but I believe in helping people and getting the protection they need. Okay? My hat goes off to you, Celinda, because that is most important, right? Is helping these people, these families, okay, especially with young children. Oh, you're doing a great job. Everything else will come, right? Do what's right first, everything else will come. So anyway, love to see that. Wanted to share with you all. Let's keep moving forward here. This is a quick survey statistics that we pulled up just for this webinar, and we wanted to show everyone, right? If you're focused on the life side, the annuity side, whatever it is, you have to understand there's a huge need for long-term care. People are talking about this. People are uneducated when it comes to LTC. You have to go out and educate and plant the seed. In fact, when Keith is done presenting at the end, I pulled up some of the top social media posts that are performing great, okay, that talk about living benefits and long-term care and hybrids to give you some examples. Okay, so there's no more excuses. When we're done today, you need to be out there getting the word on the street fast. Anyway, let's look at this large opportunity. So, number one, a recent LIMRA survey reveals that more consumers think they own LTC than they actually do. 29% of the respondents believe they own some form of standalone LTC coverage or a combination hybrid product, but the data in actual LTC ownership is closer to 3.1%, okay, not 29%, okay? So that's a big misunderstanding there for prospects out in this country. Again, it shows the opportunity is there. Number two, this is a One America study revealed that 29% of consumers researched LTC planning, but only 16% implemented a plan. What does that tell you? It tells you that you need to go out and educate and explain to these prospects what is long-term care and how can they participate and buy a policy, right, and protect their family, their loved ones. The last one here, number three, 61% of people admit to needing LTC, but only 18% own it. Okay? Again, huge opportunity. And that's why I thought this was so important because you all need to understand the basics so you can go out and explain the basics to these prospects that are in need, right? The numbers tell you everything. The proof is in the pudding. All right, let's keep moving along here. So real fast, I got a few more minutes and then Keith is going to take the wheel. Okay, Expo is here. It's around the corner now. Okay, in fact, we're about 6 weeks away. Make sure, and I said it earlier, we're capped at 300 agents because of COVID restrictions. So please get your RSVP in now. Okay, it's free. Even if you've never written an application with us, complimentary breakfast, lunch, snacks. We have an agent panel this year. We're going to make this the best expo to date. It's our 51st anniversary celebration, and I promise you, this is going to be the best one to date, filled with sales nuggets, built around sales ideas and presentations that you can walk away with to make more sales, help more families. That's the name of the game. 14 core carriers will be in attendance. And like I said, the networking lunch, agent panel, very, very different this year. We're excited about it. If you've written at least 25,000, you get a free night at our beachfront location right on the sand. And then 50,000 round trip airfare, one free night, 60,000, two free nights, and then of course round trip airfare anywhere in the country. In fact, we have a few agents coming in from Hawaii. So it doesn't matter where you are on the map. We want to see you here at the Levinson Expo. It'll be a day you won't forget. It'll change your practice. All right. Last slide here is what's new at Levinson. I always say this. I look at this model, right? This platform that Levinson and Associates has. And you need to look at your model and your footprint the same exact way. And you got to say to yourself, you know, Bill or Ronnie or Lisa, whoever, right? You got to say to yourself, what am I doing? What's new? What am I trying that's different? What's unique? Okay? Because I want to make this year better than last year. I want to make today better than yesterday. You have to constantly keep your right foot on the gas, right? And you got to try new things. I don't care what level you're at today. It doesn't matter, right? You can make tomorrow bigger and better. So if you don't have a what's new at Levinson and Associates or Lisa B and Associates or whatever your company is, right? You're riding the horse in reverse around New York City in 2023, which shouldn't happen. Okay. And by the way, you talk about, motivation and moving forward and doing whatever it takes. You got to write this down. I am about halfway through this book right now. Okay. Write this down. The name of the book is called Relentless. The author is Tim Grover. Tim Grover. This is Michael Jordan and Kobe Bryant's personal life coach. Okay, also Dwayne Wade and a few others. But when it comes to running your business, being a professional athlete, he talks about these real life stories. Okay, some examples, the mindset that goes into being the best, okay, at selling insurance, at owning an IMO, at being a NFL player, whatever it is. But I'm telling you right now, it's about 8 hours long on the audio version, or obviously you can read the actual book itself. Well worth every second spent. So I'm just telling you, I definitely suggest that read. It's unbelievable. Okay, it'll change the way when you wake up in the morning, literally, you're going to have a new outlook on that day. I promise you. All right, and let me know your thoughts. Okay. Anyway, getting back to what's new. So, and Tim Grover talks about this. It's like every day you get back up. There's no such thing as failure. You got to get back on your feet. Try something else. Try something new. We do the same thing here at Levinson. Okay. Whatever it takes. That's the mindset. Anyway, let's focus all the way over on the right hand side. We have the new annuity alert that has the latest MIGA and FIA rates. Every single Monday, we email that out. If you're not getting our annuity alert, just let us know. We'll include you in the database. Carrie's Corner, great editorial. It was out about 2 weeks ago. Check that one out when you can. Podcast episode 43 on Bill Levinson Experience was awesome. I recorded that a couple weeks ago. That was with Amir. He's our social media guru. Also on the podcast, in a few more weeks, I'm sitting down with Brashard Perryman from the Tampa Bay Buccaneers. He is Tom Brady's wide receiver for 2 seasons in Tampa Bay. So you talk about a great story. He's 29 years old. He's a personal friend of mine. This is going to be amazing. And again, what does Buccaneers football have to do with life insurance? Okay, obviously it has nothing to do with it, but it's the mindset. It's the whatever it takes attitude, right? And no matter what you're doing out there, you gotta have your right foot on the gas. And if you can learn something new, right, pick up a new nugget or two, it's a win. So I'm looking forward to that. It's going to be amazing. I also want to hear about, working with Tom Brady and what that's like. You talk about mindset and drive. I mean, the guy is an animal. So this should be an unbelievable podcast episode. That's going to be 44 coming up in a few more weeks. Life settlement, switching gears for a second. We have a new checklist and case study guide that's on our website. We'll include all of this in the thank you email that you'll receive today before we wrap up with the office. So make sure if you don't get that, let us know. We have your wrong email address or it's sitting in your spam folder. Let me just a couple other bullets real fast before Keith takes over here. GTL just came out with the new Turbo Term product. We're seeing some great results. Also, the Hero Term is blowing up right now. They have that $50 cash bonus for every policy and then $75 for every policy after number 11. That's going to run for 90 days straight. We have some agents getting real creative with that because it's 100% direct to consumer. In fact, some agents are using it, right? Now, think about this as a marketing spin. They're using it with firefighters, with policemen, right? It's the Hero Term, and it's backed by A-rated Assurity. So I'm telling you right now, blowing up. Comp is great. Your agent of record, full conversion plus renewals. That is a hot product right now. And Levinson has the exclusive opportunity, right? Think about this. We're the only IMO that has it on a direct-to-consumer site, Insure Me Now Direct. So that's pretty neat. And if you're recruiting other agents, you got to write that one down. That's a big hook when you go out there and spread your message. On the annuity side, we have our Jimmy Buffett Margaritaville cruise, 5-day cruise. You win, you write 500,000 of FIA premium, and you get a cruise 5 days on Jimmy Buffett's new ship. And then, of course, the Expo qualifications I went over. With that said, I'm going to put a bow on this. Keith is going to take over right now. This is Mr. Keith Birkin, our RVP at One America, also a personal friend of mine, and we're on the same page when it comes to motivation and drive. I know he can tell you some other great stories, but great guy. Keith, are you there, buddy?
I am. Can you hear me?
Yep, loud and
Yep,
clear.
loud and clear. Okay, great. Awesome. Thank you so much, Phil. Um, and thank you everyone at Levinson Associates. I love being on these calls, having great, virtual FaceTime with you and your distribution means so much to me. And like Bill said, we go back a very long time. It's a collaboration and a partnership that I cherish. Phil, I love that you went on and cited some of the facts that you pulled out from that study that we did last year. That was a consumer study. We teamed up with Hanover Research and pulled over 1,000 consumers, and it's so funny. There was so much data and so many facts out of that, but one of my biggest takeaways was one of the three things that you showed. It's unimaginable to me that almost 30% of the people that we polled thought they had LTC coverage, and of those 30%, around 3% actually did. Just giving you an idea of where people are with this, and kind of where our job is in the industry to really educate and help these people out with something that has a 70% chance of happening. So great stuff there. I love that you pulled that out. That just kind of what a testament to you and everyone at Levinson. You guys are always ahead of the game and really delved into what's going on. So I am not doing a full product deep dive. What I am doing right now for the next 30 minutes is I'm going to walk you through some of the really unique advantages of our solutions. I want to take you through the sizzle. These are the things that really get your mind thinking. Sitting in front of a client or a prospect kind of almost brings up and gets your wheel spinning on some sales ideas and great ways to strategize and use our solutions to get that sale, because we have so many ways to do this. I'm going to show you some of the nuances that we have, the sizzle of the product, the design structures that just look so good, our qualified money solution, our approach for people that want to self-insure, all the different ways we can fund this, and some of the pricing structures that look really good. If you're calling in from California, I'm going to apologize ahead of time. A lot of the features that I'm showing you are on our newer product, and it's new as of 2019. But California, as we know, takes forever and drags their feet on new products. If you're in New York, unfortunately, our solutions are not in New York either, so I just want to get that out of the way. Before I jump into some of these design nuances and advantages, for those of you who haven't seen our product suite and the solutions, I want to spend, 45 seconds at 10,000 feet just explaining how this works. Our whole product suite is called Care Solutions, and it really boils down to we just have two products. Our whole life combined with a very feature risk robust long-term care policy, or our annuities combined with the same very feature rich robust LTC. And the way it works, whether it's the whole life chassis or the annuity chassis, your clients are going to fund the policy all these different ways. And I'll get into that in a second. But they're going to fund the policy, and you're going to have the base of the policy, which would either be whole life or an annuity. And when your clients need long-term care, they'll use the base first. So if it's whole life, it's going to create a death benefit. They'll use the death benefit first for long-term care. There's also going to be cash value in this. They're going to fund this. Whatever goes into the base of the policy, the life insurance, there's cash value. So live, quit, or die, your clients are always getting value out of this. They quit, they get their money back with cash value. They die, it's a tax-free death benefit. They need it for long-term care, they're going to use their death benefit for the long-term care. But once they've exhausted the death benefit, where our policy is so advantageous and our biggest value prop is we will continue on those long-term care benefits for either a period of time, or with us, a lifetime. We will never outlive, or they will never outlive their benefits. That's one of the options. So you have the base of the policy and the continuation rider, which gives you more long-term care. And that's basically how this all works. And the question is, where's your client's money, and where is their premium comfort zone in funding this? And that's where we're so different and so unique. Our solutions are 100% as unique as your client. I don't care, as long as they have money somewhere, we're pretty much able to come up with a 100% custom fit solution. You're never trying to fit your clients into this. You're always fitting this around them, because we'll accept a single premium. We'll accept a recurring premium, which could be an annual pay, a 5 pay, a 10 pay, a 20 pay. We're going to work with your client's qualified money, whether that's an IRA, 401k, or 403b, and we have a phenomenal solution. I'm going to go into all these, by the way, where we'll work with your clients or your wealthy clients. And I love positioning this for people that want to self-insure. Fantastic. It's exactly what we're going to do, just much smarter and much better, and that's using our asset care return of premium approach. But our unique standouts, and that's what today's about, this value proposition, the sizzle on our solutions, some of these things that just turned illustrations into applications that you're not going to see anywhere else. And that's starting with waiver of premium while your clients are on claim. This is huge. 42% of our policies are on a recurring premium basis. When your clients go on claim, and mind you, one of our biggest selling features is that our policy is a joint life second to die policy, which means you can have one couple on one policy with one premium. That's huge. So if you do have a husband and wife on a policy and only one of them goes on claim, if they're on a recurring premium chassis, we're going to waive that premium while they're on claim. But not only will we waive that premium, we're still going to consider that premium earned into the policy. So if you have clients that bought one of our 5 pay options and the husband goes on claim in the second year, they will stop paying premiums. We'll consider that year's premium earned. And if he's on claim for the next 3 years, all those years are considered earned premiums. That's now a paid up policy. They have a lifetime of benefits for both him and his wife. They only made 2 premium payments. That's huge. Very unique, our qualified money solution, which I will go into detail, that has a 25% earned income bonus on the premium coming in from their qualified accounts. You're going to love that. Over 70% of the time, clients will start off on claim at home. With us, that's such a big advantage because clients that go on claim at home get benefits paid to them day one. We have a 0-day elimination period for home care. So our elimination period is only for facility, and it is 90 days. But every day that a client is at home receiving care, that will satisfy day for day one of their facility elimination periods. And of course, our calling card, what we've always been known for, are lifetime benefits. Your clients will never outlive their policy. Let me tell you something. You will never have to apologize to a client for putting them into a lifetime benefit, but you might have to apologize for not. Again, I told you we're joint life. I love this. 2 people on one policy, and our premiums on the recurring premium chassis, they're non-cancelable. So we're doing this almost 40 years, and I'm not going to tell you we've never raised premiums. I'm going to tell you we can't raise premiums because our policies are non-cancelable, guaranteed renewable, and we have a very unique feature called the Spider Rider, which works really good with recurring premiums. You can drop in money with it, brings your premium down, gives you more benefits, and I'm going to go into all of this pretty quickly, so stay strapped in. And if you want any more detail and more information on this afterwards, reach out to Andrew, Josh, Bill, whoever you're working with at Levinson and Associates, and we'll put you in touch with the One America representative in your area, and we're happy to always go through this again. But call Levinson. They know this stuff too. You're in fantastic hands with Levinson and Associates. So this is how it works. Here's a 60-year-old couple trying to get $6,000 a month as their LTC benefit. And here's just showing you a single pay option. So they came up with a single premium of $138,000 and change. That's giving them a death benefit of $200 grand. So again, what I love about these solutions, live, quit, or die, there's value here. They're coming up with 138 grand. If they want their money back, they'll get cash value. They can quit and get money back. They die, they never need it. Well, their 138's yielding a $200,000 death benefit. Their estate wins, it's tax-free. If they need this for long-term care, we're going to use that death benefit first. We're going to divide that over 33 months. That's one of the two options on what we can use to divide it by. And that's how we get the $6,000 a month. 200,000 divided by 33, that's $6,000 a month in long-term care benefits every month. That's per person. So if they go and claim at the same time, they're going to get $12,000 a month. That's $72,000 a year each, or $144,000 total for long-term care. So they'll use their death benefit first when they need long-term care, but they bought the continuation of benefit rider and they bought a lifetime benefit, which means even if after either or both of them go on claim and they've drained down their death benefit, it doesn't matter. We're going to continue on this $6,000 per month per person forever. They're going to get $144,000 a year available to them for the both of them for long-term care, and it never, ever ends. That's our single premium approach. Another way to do it, instead of coming up with 138 grand and paying for the whole thing, the base and the rider, you can do a single premium covering the base of the policy and an annual premium on the rider. And the idea here is for people that don't want to come up with almost 140 grand. Look at these. We're saving almost $60,000 here, or about $53,000. Instead of coming up with 138, they're only coming up with 81,000 and paying off the rider annually. But look how small that annual premium is. It's less than $3,700 a year. That's $3,670 annual premium, which, by the way, can be paid with HSA dollars, or for your clients that own businesses, they can have their business write the check on this every year, and it's 100% deductible to the business, and it doesn't matter the filing status of the company. It's always deductible to the business. So here we're showing you a single premium on the base, and we're doing an annual premium on the rider. And for those of you that still sell traditional LTC, how much would an annual premium on a policy for a 60-year-old couple getting $6,000 a month each for a lifetime benefit, which you can't get, by the way? You'd probably be looking at a minimum of $15,000, $20,000 a year in annual premium. But here they're coming up with $81,000 up front, gives them the same death benefit, same monthly benefit per person, and a very small annual premium of $36.70 a year. From a pricing standpoint, where are our niches and design advantages? We look great with couples because we're joint life, so it's a couple on one policy with one premium, really good with single males. And we're going to go into how our qualified money high net worth solution for people that want to self-insure, and we'll look at the spider rider. But look at the advantage that we have, the buying power we have over the other carriers. And to be fair, I do need to update. Securian did do a price reduction, so they're looking a little better than this right now. But what we're showing you here, you got a 61-year-old male and a 60-year-old female couple. They got $150,000. They want to drop in on a single premium onto a linked benefit policy with every other carrier in the industry. They can't put 150 into one contract. All of them have to separate that into two separate contracts of $75,000 each. As couples, this is a huge niche for us because we could put 150 into one contract, which means we're getting a death benefit on 150, which means we're getting a long-term care benefit on that death benefit instead of splitting up their money. And look how much more long-term care benefit you're going to get monthly with us versus the other carriers. We're almost $2,000 more per month per person, and that's to our next closest competitor. Again, we have to look at the new numbers with Securian, but look at the other carriers. We are dramatically more in couples benefits. Not to mention, our policy never runs out. These all run out after 6 years. We look phenomenal for couples as well as for single males. So here's an example of a single male dropping in $100,000, single premium. Of that 100,000, 74,000 and change goes to the base. The remaining 25,000 and change is paying off the unlimited lifetime continuation of benefit rider. He's getting a death benefit of 156,000 and change and a pretty healthy monthly LTC benefit. Every month he's going to get 6,261. This is a really good looking policy. But one of the things that you could do with us that you can't do anywhere else, because this guy's 60, he's getting 6,260 a month, which isn't bad, but he might not need this policy for 25 years. So one of the things I showed you before was instead of just dumping in 100 grand and using that to cover the base and the rider, let's put that 100,000 all into the base and have him pay an annual premium on the rider so we can bring up this 6,200 and change up to a better number for when he needs it 25 years down the road. So look at what happens when we do that. So 100,000 coming all into the base is, and we're paying off the rider annually, it's bringing the death benefit up to almost 200,000. What's the relevance of that? Well, it's always the death benefit that delineates what the long-term care benefit is. Remember, his monthly benefit before was 6,200 and change. We just bumped that up to almost $8,000 per month. Now we're looking good when this guy is going to need this in 25 years. So how do we do this? Instead of coming up with one check for 100 grand, paying the whole thing, he's going to come up with that 100 grand. That's all going to go into the base, but we're going to pay the rider off annually. But look how unbelievably, ridiculously inexpensive this is. We're looking at $1,800 a year, $1,822 annual premium to give this guy about $2,000 more per month for long-term care benefits, about $1,800 more per month. That's incredible. I love the ability to single pay the base, annual pay the rider, and for a single male, the cost on this is absurdly affordable. So one of my favorite things to talk about, because no one can really do this, certainly not in this capacity, is our ability to work with qualified money. So we'll work with your clients' existing IRAs, 401ks, 403bs, and we call this product, it's a fantastic product with probably the worst name that could have ever come up with. This actually acronyms out to awful: annuity funding whole life. This ultimately is our asset care product on a 10-pay chassis, but we use an annuity to get there. So all we do in essence, we set up an IRA at One America in your client's name. And sitting in that IRA is just a regular vanilla fixed deferred annuity. Now, the first function of that annuity is to give your clients an immediate 25% earned income bonus. So what we do is we roll over a lump sum out of your client's existing 401k or IRA into the IRA at One America, where it goes in that annuity. We give their money a 25% bonus on top of that, and then we just use that money to make 10 equal payments into one of our 10 pays. So let me show you how this works. Here's an example. You got a couple. We'll use the husband's IRA money. He's got a bunch of money sitting in an IRA. So we're going to grab 150,000 of that and roll that into the IRA set up in his name at One America. And remember, in that IRA is sitting a qualified annuity, which has this first function of giving his money a 25% bonus. So we're going to make 150 worth 187,500 because we're going to add $37,500 more than what he put in. So now we've got 187,500 sitting in this IRA, in this annuity at One America. And all we're going to do is we're going to draw on that every year for 10 years to fund one of our whole life asset care 10-pay policies. This is not annuity care. This is not one of our annuity products. We're just using an annuity inside the IRA to give their money a bump that we're going to draw down over 10 years to fund one of our whole life 10-pay policies. So we're going to take 10% out every year for 10 years. So in this example, on 187.5, that's 18,750 every year. So year one, we're going to withdraw out 18,750 and make the first year's premium payment into the asset care 10-pay policy. Now, is this money taxable? Of course it is. We just pulled it out of an IRA. Remember, we were sitting before, it was taxable in their original IRA. But what we're able to do here is we're able to take a lump sum out of an existing IRA in one transaction in 1 year and split out that taxation, which they're going to realize anyway, over a 10-year period. Oh, and by the way, give them $37,500 to offset the great majority of that taxation. Oh, and let's add to the fact that they can add their spouse onto this policy. You can't buy insurance on two people out of an IRA. because we're doing it like this, we can. So every year we're going to draw down the annuity and the IRA by $18,750. Look at a 1099 on that. But by the way, for clients north of 72, this is going to satisfy required minimum distributions. So what would this policy look like for this 60-year-old couple, bringing over $150 and pulling out the 18,750 every year for 10 years? Well, they get a death benefit of a little over 200 grand, an LTC monthly benefit of just over $6,000 per month. And again, that's per person because he added his wife onto this policy, and they're getting an unlimited lifetime benefit they will never exhaust. Now, remember, I told you anywhere we have a recurring premium, if there's a claim, those premiums will be waived. So if either husband or wife, in this example, either one of them goes on claim during this 10-year funding period, we will stop the premiums, the $18,750 that would be coming out of the IRA, out of the annuity to make the premium payment into this 10 pay will just stay there and there'll be no taxation. Or the other option is they can pull out the $18,750, pay tax on it, pocket it, keep it as cash, and keep it as income. Another unique feature to this, in the event where the husband, in this example, that had the IRA in his name, in the event that he's not insurable, I mean, ideally, we want them both on this. We want to protect the family, protect their assets. But if, unfortunately, he doesn't health qualify, we can still use his IRA set up in his name to do this policy just on his healthy spouse, on his healthy wife. Love this solution. You're not going to see a better solution for people that are looking to protect their family, protect their assets, have the bulk of their money sitting in 401ks, IRAs, and 403bs. By the way, we will do this up to the age of 80 years old. We'll go as young in this solution as 55. Yes, they're going to get the 10% penalty. And man, I tell you all day, take it. Don't wait till they're 59 and a half to avoid the penalty. Do it now, because as you get older, premiums are more expensive, and will you be insurable? Here's another example of a 60-year-old couple, excuse me, pulling out just a little more money, $200,000 from the IRA. So we're going to give them a 25% bonus, which is another 50 grand. So now it's worth 250, which means it's going to be 25,000 a year for 10 years. And look at what a healthy policy this is. They're going to get $8,000 a month per person for long-term care on a lifetime chassis. This works, by the way, phenomenally with the Secure Act, which now changes the treatment of inherited qualified accounts by beneficiaries, by non-spousal beneficiaries. Now you got kids that just inherited their parents' 401ks or IRAs. They have to get that money out of those accounts inside of 10 years. Well, our solution is a 10-year solution. This is a fantastic opportunity. You got, a 60-year-old couple, they just inherited a bunch of money from one of their parents. Take some of that money and put it into this. You got to get it out in 10 years anyway. This is a 10-year funding period. Use that, protect some of the nest egg you just inherited along with your own nest egg, and most importantly, protect your kids from having to take care of you. I also love talking about this solution, and this is our approach in working with the affluent. I mean, the favorite objection that I'll always take any day of the week is I probably have too much money and I can self-insure. Fantastic, because your retort back is now you want to self-insure. It's exactly what we're going to do, just much smarter and much better. When working with high net worth clients, generally, if not always, they've always got some money under a mattress, in a bank account, money market, cash fund in their investment account, emergency fund money sitting doing nothing, but God forbid they have an emergency. That's the money you're going after. This solution is our single premium solution. You're just asset care, single premium, but we're adding the guaranteed return of premium rider, which means no matter what, at any time, no reason necessary, they will get every bit of their premium back, whatever went into the base, whatever went into the rider, in full with that penalty. So basically, their emergency fund money that's sitting in a bank account, what does it matter if it's sitting in a bank account or if it's sitting at One America in the solution, because they can get it back at any time entirely in full. It's self-insuring, just much smarter and much better, because here we're going to leverage it. Same money, doing nothing from an investment standpoint, but man, are we leveraging it if and when they actually need it. My favorite part of this rider, there's no cost on it. There's no premium cost to add this rider. We do, however, limit the policy design a little bit. You can only get a 50-month acceleration on the death benefit for long-term care and the continuation of benefit rider. Lifetime's not available. It would be another 50 months, but that's still 100 months of long-term care. So here's an example of someone doing a single premium without the rider. 60-year-old couple or 61-year-old male, 60 female, coming up with 150 grand. Of that 150, 70,000 is going to the base, 79,000 to the rider. So if they ever want their money back, they're only going to get the cash value on the 70,000 in the base. This money's gone. That goes into the rider. But with guaranteed return of premium, that 150 that's coming in, it doesn't matter what's going into the base. It doesn't matter what's going into the rider. It doesn't matter what the cash value is. If they want this 150 back, they get the full amount back at any time. So again, it's just like another account that's in their portfolio. Doesn't matter if it's at the Bank of America or Bank of One America. It's the same money. The difference is we're going to take that 150 instead of sitting in a bank account, and if they died, it's only worth 150, and in probate, worst case scenario, we'll turn that 150 here, this example, just about 152, into a tax-free death benefit of 300 grand. But if they need this for long-term care, again, that 150 sitting in a cash account doing nothing with us would be worth $600,000 for long-term care benefits. Self-insuring, just much smarter and much better, because at any time, this money is returnable. It's just another account that they have in their quiver. I love talking about our single premium drop-in rider. This works on any of our recurring premium options. For clients that have some assets, the idea here is if you're doing an annual pay, a 5-pay, 10-pay, or 20-pay, you don't have enough assets to write one check and be one and done, but you have some assets. The idea is you can put down a small down payment, what I mean like 20, 30, 40, 50 grand, and still pay ongoing premiums. The idea is it'll make your premiums less by doing that. It's kind of like putting a bigger down payment on your house to make your mortgage payment smaller. Here's that example, or an example, of a 60-year-old couple, and they want to do a recurring premium. So they are looking at doing an annual pay, which we call pay to 95. Now, instead of just doing an annual premium, they've got a bunch of money, or $50,000 sitting in a life insurance policy cash value. They're going to 1035 that money over, that $50,000, into our single premium drop-in rider. So that's a one-time infusion. And what's great about that, look how affordable their annual premium is to get $6,000 a month on a lifetime benefit for the 60-year-old couple. It's only $6,080 a year. Now, if they didn't drop in that $50,000 and they just did an annual premium to get $6,000 a month, their annual premium would have been $95.18. Still very good, because listen, they're 60 years old. They're getting a pretty healthy policy, and that's what these things cost right now. But by bringing over that 50 grand, we're able to bring their annual premium down from $95.18 to $6,080. That's about $3,500 less per year, right around that. So think about this. This couple is age 60. Average age when someone needs this policy is 85. So if they paid premiums for 25 years at $3,500, that's like almost 75, 80 grand that they would have paid in additional premiums for bringing over 50,000. So that's a $30,000 net saving. I love using our drop-in rider. All these things nobody knows about, all these different ways to design our solutions. And this is something that I really believe is more relevant than a lot of the nuances that you're going to see, because for people that are looking at annual premiums, they're going to have some assets, 300, 400, 500 grand saved. Not enough money to do a single premium approach. They probably need about 100, 150, but they'll have 30, 40, 50 grand. Dropping that money in ultimately in the long run is going to save them money over time. So I'm going to leave you with a sales idea. I want to go into a phenomenal marketing tool that we have that will send out drip emails to consumers, social media. But before I do that, I want to spend 45 seconds talking about the annuity care products, because if you don't know exist, you need to. And whether you sell annuities or not, what you need to know is your clients have them. Not only do your clients have them, but 83% of the time, they don't turn them on for income. They hold on to them because they don't want to pay taxes. The government got smart, was aware of that, and passed the Pension Protection Act in 2010, which says clients can do a 1035 exchange of their existing annuities into Pension Protection Act annuities, which gives them unbelievable tax advantage. What is a Pension Protection Act annuity? Well, here's an existing annuity. Clients dropped in 50,000. Over time, it grew 100,000 in gains. So now it's worth 150. If they use this annuity for anything, even as a long-term care, emergency stopgap, all the gain comes out first, and they're going to pay tax on it. Well, because of the Pension Protection Act, they can 1035 exchange all of the value of this annuity, including the gain, and now all of it, including that once taxable $100,000 gain, that's now all 100% tax-free if used for long-term care. Annuity care, and we have 3 annuity care products, one of them is even an indexed annuity care product, are all Pension Protection Act annuities. We turn tax-deferred annuity dollars into tax-free LTC benefits. It looks just like asset care. You have a base and a rider with lifetime benefits. We turn tax-deferred dollars into unlimited lifetime LTC tax-free benefits. I don't want to go into all the annuity products, but they're fantastic. Call Andrew, call Josh, call Bill if you want to learn more about them, but fantastic solutions for your clients with non-qualified annuities. So what I love to do is not just show you fun sales ideas and some of these things that really get your mind, you're spinning and your wheels going. I want to show you ways on how to market this. So we have something we launched a couple of years ago called the One America Marketing Store. And this is available for producers, agents, and advisors to market to your clients, consumers, and prospects. And you can do this via print campaigns, email campaigns, and social media bundles. And the greatest thing about this, by the way, it is 100% free. It's like having constant contact, free, ready, and available with ready to go content. You create a profile, we help you do that. You put in your picture, your logo, your email, your contact information. Any drip email that you send out to clients, it's going to come from your email address with your contact information with the call to action leading back to you. We have social media bundles, so you don't have to think about it. Some of these bundles last for 11 weeks. It'll post on your Facebook, LinkedIn, or Twitter account every 2 or 3 days for you on your behalf. Choose the campaign you like. It really does drive business. We've got great print media, and there is a cost to that, and it's just the price of the postage. But to give you an idea of what some of these things look like, we talked about the qualified money solution, an email that would go out like this, looking like this: use IRA dollars to fund asset care. And it talks about how this works. It gives an example. And then down here, instead of that being my mug, that'd be your face with your information coming from you. We even have the ability to track this. You're able to go in, you'll know when your emails drop. You can set them up on a schedule. They can go out every week, every day, twice a week, every 2 weeks, whatever it is. When an email drops, you'll have an option to go to a tracking report. You're able to see who's opened up the email, how much time they spent in the email, and call up those people that were most interested and be very proactive with it. Here's another example how we, I love the annuity one where we're talking about using and making tax deferred dollars tax free. Want to leave you, spend one more minute and just show you one of my favorite sales ideas. This isn't from me, but I love this. When paying for long-term care, it isn't as much about asset allocation as it is location. There's basically 4 places that you can pull money from to pay for long-term care expenses: your qualified accounts, your non-qualified accounts, cash, or you transfer the risk over to an insurance company. So the question is, how much do you want to pay for every dollar of long-term care expense you need? If you use your qualified money, for every dollar of LTC money that you need, you need $1.30 because of your earned income tax. $1.30 nets you $1. If you're using your non-qualified accounts, all your investments, wherever your money is, because of capital gains tax, for every dollar of LTC expense, you need $1.15. If you're using cash, well, that's just dollar for dollar. But if you insure, you transfer the risk, for every dollar of long-term care, you're 33 cents on the dollar. So the question you ask your clients is, when you need long-term care, for every dollar that you need, would you rather pay $1.30, $1.15, go dollar for dollar, or 33 cents on the dollar? There's no other way to slice it. This is it, folks. And again, talking about something that has a 70% chance of happening. So Bill, I don't want to go on much longer. If there's any questions, feel free to launch them out. But thank you so much for this valuable FaceTime with your team and your distribution. You know I love working with you guys. And I'm going to pass the baton back to you.
Keith, that was awesome. As always, I expect nothing less from you, but great, great job, great information. So I'm going to move really, really fast to get everybody out in 4 minutes or less. We also have our giveaway in 4 minutes. So on my last slide, I'm going to ask a question, and whoever answers first and correctly wins. Your choice. I have a Fire HD Amazon tablet, Apple AirPods, and the new Amazon Echo earbuds. So you get to pick, plus our IUL prospecting book. We're going to throw in. Andrew, if we can mute the lines, that would be great. Okay, so I am going to move quick, and what I want to mention real fast is if you are set up currently with One America and you want to transfer over to Levinson, we would obviously love that. Plus, you get to leverage the prospecting store, all of Levinson's marketing library resources, all the above, and cash for contracting. What that means, you get $100 cash with your first paid application with One America on top of as good or better compensation. Okay, so we make it a win-win. We'll include all of this in the thank you email. The next slide, real fast. These are our core company top hybrid products. And, you know, Keith had that chart, and what he mentioned, he was exactly right. One America definitely has its niche, and they shine when it comes to premium and benefit. But obviously, we have these 4 companies available to you as well, with One America at the top for a reason. The next slide, real fast, is guaranteed issue LTC, right, on an annuity chassis. So we have a lot of situations where an insured can't qualify because of underwriting on a life policy with LTC rider, or maybe a standalone LTC policy. So these are great alternatives with Equitrust and Global. So you can call Josh or Ashley anytime, and we can get you set up with those 2 companies as well. Okay, next up is, when you're thinking of LTC and hybrids, how do I generate leads, right? What is the best go-to resources that are available through Levinson? So on the left-hand side, that's the Ringy platform I was talking about earlier. We have a 2-week free trial, or if you want to set up your entire database through Ringy, it is $69 a month. That's a Levinson discount, 30% off, and that runs for 6 months. So that's a great, great platform. And then what I would do is use our Agency Automator client database, right? And what you do is load the buckets, the consumer buckets, into Ringy, and then set it on autopilot with a LTC campaign or hybrid campaign or even living benefits campaign. You have to just make sure you hit the hot spots, right? So people want to set up the appointment to talk more. Top right corner, this is our financial services mailer. This is great for long-term care, for annuities, for single premium. It's all up to you and how you pivot, but these people are interested. When they fill out the card, the replies go directly to your address. Okay, and then it's up to you at that point. Bottom right corner, these are exclusive leads that are generated from Facebook ads. Okay, and these people are clicking on up to $1 million of life insurance, no exam life insurance. So again, it's up to you how you pivot in the journey you take them on. But these are awesome. This is where some of our largest cases are coming from now. Okay, the next slide. What I wanted to do is show everyone example long-term care posts and ads that are running today on social media and performing great. Okay, and let's just look at the top left for a second. Now, this is very, very simple, right? This is a quote, and what this agent did is they posted the quote, and then they're reaching out to everyone that liked it or commented. Learn from the mistakes of others. You can't live long enough to make them all yourself. And then they have a mention under it about living benefits. One over from that is with Life Happens. I encourage all of you to check this out if you haven't yet. This one generated 309 likes and like 70 comments. Okay, very simple. Instead of thinking about long term care insurance as another expense, bottom, try seeing it as a tool to help safeguard your retirement savings if you need care, right? Hello, that's the door opener. Right, just over right hand side, long term care insurance, the missing piece of your estate plan. And then it explains real fast in a paragraph what is LTC. Let's move over to the right hand side. Now, what I did is I put a hashtag top post for long term care insurance, right? Very simple. I always say you don't have to go out and reinvent the wheel. You just add a few spokes, right? These are great examples. 20% of those over 65 will need long-term care for over 5 years. That's the door opener. Hey, run me a quote. I'm interested. Boom, you come in, make the sale. The rest is history. The Bill Levinson Experience Podcast 43, if you want to get the word out, right, for living benefits, life, annuity, whatever it is. This is a great training tool for you because I sat down with Amir from Watt Media. He is the one in charge of SEO, which is search engine optimization, where if someone goes into Google, they put in long-term care, Boca Raton, Florida, your name comes up. Also, paid ads on social media. He's the one that hosts these paid ads and puts them together. Also, website traffic, right? And drawing new eyeballs to your website to run quotes and hit the more information button, which is a new lead. Okay. This is a 1 hour interview that talks all about those items, again, to sell more online by utilizing social media and website traffic. Okay, I am just about done here. 1 second. Future trainings. This is what is coming up every single week here at Levinson. Agency Automators on the top. Every Tuesday, Wednesday, Thursday, we host these live with Kevin, our programmer. And then on the bottom, this is a first ever for Levinson. Next week at 3 p.m. on Thursday, we are going over, handpicked, our top sales strategies to increase your life and annuity production in 2023. This is going to be awesome. 1 hour full of our top sales strategies that we're seeing agents go out there and do successfully. So we're sharing these items with you. Our last slide and question of the day. But first, left-hand side is my Positive Tuesday quote. When you're so committed to success, you can say yes without fear and no without guilt. The sky is the limit, right? You know how that goes. Go out and get that book too that I mentioned earlier. I had a few emails already saying what was the name. It's Relentless by Tim Grover. In fact, what I'm going to do for today's winner, I'm going to include a free copy of that book on top of the other items. So real fast, you got to answer first. Here's my question. Are you ready? Okay. Whoever answers first wins. Question is, you tell me. I spoke about these 4 new Assurity Life products launching on InsureMeNowDirect.com. Okay. CI, critical illness, disability, term life, guaranteed issue, accidental death. 4 new products by Assurity Life added to Insure Me Now Direct. You tell me the launch date. When are we launching these 4 products on Insure Me Now Direct? You tell me the date and you won. Andrew's checking answers. Whoever answers first and correctly wins. We got the Fire Amazon tablet, HD8, Amazon AirPods, Amazon earbuds, or the Apple AirPods, and I'm throwing in IUL prospecting book and that Relentless book that I mentioned a couple times already. Andrew? Who's our winner today?
Okay, first and correct answer is Lloyd G. Lloyd G.
Lloyd G. The answer was trick question. It's actually at the expo we are launching, which is 4/21, April 21st. That is the launch date of the 4 new products on Insure Me Now Direct. Congrats, Lloyd. And congrats to all of you. You're all winners because you stayed on, right? Over an hour with us. You walked away with nuggets. Okay, I know I did. So this was a win-win-win for everyone. Thank you again. Keep your eyes peeled for the thank you email. Any questions, reach out to our life or annuity department anytime. We're here for you. Have a great week and good selling. Thanks again.